when do you guys see then the cycle topping? Like, where are you, or what's your view? How do you see that playing out?
Yeah. Nobody has a crystal ball, but I don't think there's a lot of conversation now around, is it a 4-year cycle? Is it a 5-year cycle? I don't get too caught up in the semantics of that. It's more like, what does the underlying data tell us, right? I agree that I think the top for this cycle, call it 12 to 18 months ago, we probably would have said more around this time, right? End of 2025, maybe getting into early 2026. I do think it can get extended probably into at least the first quarter, first half of next year. If I had a gun to my head, I would say Q2 is probably where we start to see, a local top. But a lot of that is because, again, liquidity backdrop looks good. Our projections, this liquidity cycle is not in the earliest stages either, right? It's not as if we're saying, hey, everyth's about to start. Like, there will be I think a top at some point next year where liquidity growth starts to slow and potentially even reverses. But the lack of a real true business cycle this time around, there's a number of indicators that point to, again, into the end of year and you could argue the first half of next year being pretty favorable. So that right now is kind of my base case.
I want Jesse to respond to that, but let me just quickly give one chart that I want you to talk about, which is your Bitcoin top signals model chart. So just give us a little bit on this, and then Jesse, I want you to jump in because I know you have great thoughts on the top as well.
Yeah, we put this together. It's basically a combination of 10 to 12 different indicators that we look at, both on-chain indicators as well as, call it off-chain or more macro indicators, right? So a lot of stuff we've talked about, financial conditions, global liquidity, we've got some credit indices in there, the dollar, and then just what we're seeing kind of an on-chain activity, and put these together to essentially give us a more longer-term view of, this isn't going to be perfect in terms of calling the exact day of the top, but roughly speaking, like, where are we and do we still have room to run? So there's just a top signals indicator that we look at, especially when we're putting together more, I would say, a medium to longer term outlook that will reference to almost kind of sanity check if a lot of the things we're seeing on an individual components level is lining up with that thesis. And again, this points to, we're not necessarily early stage, but we definitely still have room to run in our view based on, all these different indicators we're looking at.
Jesse, I'll let you jump in on your thoughts on cycle now.
Okay. So I was just curious what you guys thought. And there seems to be a lot of people right now that believe that like Q2 is going to be the top. And I think I'm one of the few people that like, I actually super disagree with it. And the reason I disagree with it is because if you look at past cycles, the markets tended to like peak after liquidity crested. And there's a really solid case that liquidity should go higher well into 2026, not just off the fact that like Powell's out of office in May. And so if you're looking at like rate cuts, when do you expect the majority of those rate cuts to come? I think it's going to be after May. And I think the reason you're going to see that, and I think the reason maybe a lot of people aren't expecting it, is because it's not reasonable, the amount of rate cuts that I believe we're going to get. And that's because Trump wants to, as he keeps saying over and over, and Scott Bessent, they want to run the economy hot. Next year is a midterms year. They want the economy just like pumping. And so I think we're going to get more rate cuts after May. I think because of that, you're going to see liquidity actually crest a little bit later than most people expect. On top of that, if you look at things like the changes to the SLR coming, possibly early next year, on top of like all these like market structure changes of like all these ETF releases, all these institutional like products launching, on ramps, etc. All those things have a slow rollout, and that means more buyers, more people coming into the market. And I think just a lot of people have underestimated like how much of this market has been just kind of this structural bid. What I believe is from boomer money. If you look at a lot of the buyers, the ETFs, they've been primarily retail. A lot of financial advisors are like, hey, let's jump into Bitcoin via these ETFs. I think that's what you're seeing is that boomer money. And so I think that's throwing a lot of people off when they look at the charts, and it's just been up only since 2023. And they're like, hey, this can't last much longer. And they don't realize that actually it can last way longer, because this has just been like pure structural bid from these boomer, ETF flows. On top of the fact that you have like regulation changes like the Clarity Act, all these things come into place in 2026. It's just really hard for me to think like with all that happening that will end up peaking early 2026. The only way I could see that is if things really got unhinged, let's say like late into this year and then early into next year, if things really got out of control, obviously Bitcoin goes up too fast, it's going to come down. The market just becomes too unstable. But as long as like it's just, tempered on some level, I think liquidity peaks later in the year. And I think we're probably going to July or fall of 2026. I don't know. That's my take.
Yeah, I think it's also funny that I completely agree. The faster that BTC rises, if you really do get some type of like exponential blow off top, which I'm personally not expecting, but if you do, counterintuitively, it pulls forward or increases the probability that you actually do get some type of serious, not like correction, but let's say like downturn, right? Because things get pulled too forward or run too hot, too fast. I think an important clarification, because there's a lot of things you said that I do agree with. When we talk about where Bitcoin's going to peak, whether it's first half of next year, gets extended into later next year, or potentially even into 2027, I don't expect, when I say like a topping signal, let's say maybe around Q2, right? I don't expect us to be going through what we went through in 2022 and into early 2023 in terms of some type of massive overcorrective, prolonged bear market period, which I think makes this question a bit difficult, right? And it's also not saying like, hey, we're never going to see another Bitcoin bear market ever again. Like I completely subscribe that markets are going to continue to be cyclical. The more that Bitcoin becomes a macro asset, it's going to be impacted by the allocation changes and the investment decisions that these big asset allocators are making, right? And again, all asset classes are going to be subject to that. But I agree that heading into 2026, as long as we don't see some type of major recession, the outlook is on a longer time frame, right? 6-12 months. It remains really favorable for risk assets because typically that's the thing, that's the dagger that puts in these big, huge corrective bear markets and prolonged bear markets. And as long as we avoid that, I agree with your kind of thesis or your view in that, this can continue to run hotter or longer than people expect. You could see Q2 going into Q3, maybe again, things trend well, gets a little bit long in the tooth. Everyone's got exposure, leverage picks up. You see some type of corrective price action Q3, and then we set up another similar situation we're looking at today, right? Heading into a bullish Q4 2026. So I think that's also like an important clarification and why this question sometimes is tough when you get like 10 different people, 10 different answers, is local tops, cycle peaks. As long as the underlying data of what we're talking about with liquidity and you avoid the big kind of external shocks or risks, this can run much longer than people think.
Yeah, and maybe I should clarify too. I do see a pause in the middle there. So I don't think it's like up only from here. I think either one of two ways this plays out. Either one, you have so many people in crypto that believe in this 4-year cycle that it just creates, it kind of memes into existence, this sort of sell pressure at some point, maybe December, early January. Or two, when we have tax season come around, that is kind of a liquidity draw, right? So that's equivalent in some ways of the TGA rebuild we're going through. So maybe we have a pause there instead. I don't know exactly where, but I do see it kind of a run up, a pause, and then a second, a part two runoff, and then a blow off top, because I do think that I agree with you that structurally the crypto markets have changed in a meaningful way. But I do think that when markets get too frothy, you have to have, you have that blow off top, and then you have this cool down period. And so I think what we're both referring to is that bear market is that cool down period. And I do see that happening after the markets have that blow off top moment. But, for that to happen, you do have to have Bitcoin and crypto, have some sort of meaningful frothy run up in the first place.
Yeah. And why like longer term? I spent a lot more time thinking about the longer term future, right? And again, these secular trends versus where Bitcoin's price is going to be next week. When you zoom out and back to our earlier conversation of deficits and debt and liquidity, the reality too, when you just look at the math is the fiscal deficit question, right? We're talking about, we're running extremely sizable fiscal deficits in a non-recessionary period in the US at a time when stocks are at all-time highs, which means that the amount of tax revenue that the government is getting, right? Because again, that plays a huge part into it. When you look at government tax revenue year over year and you look at the S&P year over year, same chart. So tax revenue is at an all-time high, right? Which is what is the revenue part of that fiscal deficit equation. The fact that we're running such massive deficits, even when the earnings side of the revenue side of that equation is also at all-time highs, means that in a twisted way, we need markets to continue to run higher, because at this point, financial markets, especially risk markets, in my opinion, drive the real economy, right? We've got the tale of two economies today where the rich keep getting richer. And when you look at the kind of, bottom 50 or 60%, there's a lot, you could argue that that cohort is already in a recession or has been in a recession, dealing with the aftermath of inflation, rising costs, labor market, right? There's some data in there that's showing like that there's some weakening. But the reality is top 10% of earners that make up 50+% of consumer spending, as long as their portfolios are going up and markets are at all-time highs and continue rising, you can continue to see economic growth and avoid, by all statistical measures, some type of real major recession that usually, again, leads to markets crashing, right? So it's this circular kind of narrative. And this is why, again, Bitcoin is like the ultimate almost release valve for the amount of liquidity that we expect to come in, is because the math right now, until we get some type of really massive AI productivity boom, and there's this whole kind of humanoids aspect to it and labor market disruption, like a productivity explosion, until that comes, the math, again, for the next at least few years still points to us running the same kind of playbook we have been running, right? And you could argue that if we did fall into a recession, that only pulls forward all of what we're talking about here, because every time you fall into a recession, fiscal deficits explode even higher, right? Tax revenue drops. So that, again, worsens that equation, makes that equation worse. Like, the more you try, I've spent a lot of time trying to poke holes in this core thesis we've had, right? Because again, the flip side of this argument is, okay, what is it, in order to be bearish Bitcoin, what do you need to believe? And one of my big assumptions is you have to believe that we solve this deficit, debt, and liquidity problem. And I just don't see, at least in the next few years.
That's laughable. That's laughable.
Right? That becoming
like,
a
that
reality.
Well, no, you're not wrong when you say that recessions are almost bullish at this point, because, like, for example, if we went into recession next month, it hit asset prices, but then the Fed's dropping rates. We're getting, some form of QE. Trump's already talking. This is like the fourth time he's mentioned tariff stimmy checks coming next year. I think he's actually serious about this. I thought it was a passing comment, but like, he keeps mentioning it over and over. And can you imagine if we get tariff stimmy checks in Q1, Q2 of 2026? So I have this belief that actually 2026 for crypto, everyone keeps saying we're never going to have like anything close to 2021. And I agree on a liquidity front, that's true. But if you think about a crypto front, we have never had a more bullish setup in terms of like market structure, like onboarding, adoption, ease of use, and just like retail being told by everyone and their mom on CNBC, whatever, that crypto is the future, tokenization is the future, etc. I really think like the direction of liquidity could point its way over to crypto, right? Whatever, Nvidia is still bigger than the entire market cap of crypto, so we don't need that much liquidity for us to go up, right? So I think people are really underestimating how big and how high crypto can go over these coming cycles without having, a 2021 liquidity explosion. So I'm crazy bullish going into the future for all the same reasons that you just mentioned.
That's why 100% of your portfolio is in crypto, which is you're putting your money where your mouth is. That's for sure.
Yeah.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.